cash is ultimately a king. It is very, very essential that we need to have a daily focus on cash. You start taking someone on the board as an independent member. That person would give you an insight of a listed company, somebody to question you. There is no free lunch in this world. There is a commercial transaction. We are not into charity.
Welcome to Masterminds, where we invite industry leaders to share valuable insights on scaling up a business. I'm Sandesh Banger from Success Alchemists. We are a business coaching organization that focuses on helping businesses scale up. Today we have Mr. Nimesh Mehta with us. He is a seasoned finance professional, a chartered accountant who has led many organizations in the finance vertical. He started his journey from Grasim, followed by Bombay Dyeing. Then he worked as a CFO of a future group company, followed by Oberoi Reality, and then Lakeshore, which is an asset management company of Abu Dhabi Investment Venture. Welcome, Nimesh, to Masterminds.
Thanks, Sandesh. Thanks for inviting me. And special thanks to Chirag for pushing me into this.
Thanks, Nimesh. I would like to start with the finance vertical itself. What kind of metrics, what kind of systems do you usually have that helps top management understand how things are moving?
Keep it as simple as possible. And my first learning was from Grasim, which is a Marwadi company. And as you know, Marwadi people prepare parta, which is a daily kind of a profitability. Now, for cash flow purpose, the daily cash dashboard is as simple as what is the opening balance, what is expected receivable, what checks you have processed on that day, and what would unutilized bank limits going to be. This is the first and foremost, and that needs to be there on the CFO's table first thing in the morning. That gives you a visibility of the day. That said, you moved it to a rolling kind of a cash flow forecasting, which should not be more than 8 weeks to say, which gives you an idea if there is a gap, how to prepare for it and where to make arrangements for it. Third, I would say how you are implementing ERP systems. If your ERP system is integrated with the treasury, it gives you a cash forecast very easily. You know what is cash outflow throughout the year based on your budget, based on your actuals, and how ERP is getting integrated for collection as well. And I can give you a very classic example when you implement ERD or SAP for that matter, or REFX to say, when you are into retail leasing. It captures the entire agreement's terms till the exit of the retailer. Even the escalation in the deposits also is getting captured. It also helps you because it is already integrated into the system. It helps you to send a reminder or auto reminder to your clients. The follow-up becomes easy. The escalation becomes easy. So this is the usefulness of integrating system for the cash flow purposes.
I was quite keen to understand this. So you said in a Marwadi business, you use a parta. What was that?
Yeah, it's a parta system. What parta system used to do, each and every unit of Grasim used to send at 9:30 in the morning the previous days what was the production capacity, what has been utilized, what was the raw material consumption, how much of material has been dispatched, what is the bank utilization, and what was the collection. So entire profitability in a one pager of that plant gets captured. And every unit without any reminder needs to send that. And earlier used to be having a fax. Fax used to come at 9:30 in chairman's office. Similar way, we can do it in any of the businesses.
Right. It gives an overview of the entire business at the start of the day. And I think that's a very good practice to begin with.
Cash is ultimately a king. So it is very, very essential that we need to have a daily focus on cash. Whether it would be delegated to financial controller or to CFO, it's a different matter. But somebody owns it. And that is what I feel it's important.
Correct. So I think a very good insight that on a day-to-day basis, CFO or the finance controller should definitely have a picture of what is my cash position, what are my cash flows going to be. And I think that speaks for itself. Thank you for sharing that. I would also like to understand, so as part of your work and experience, have you identified some mistakes that top management usually makes when it comes to managing the finance function or the cash flow?
Where people make a mistake is fund those categories which are not performing well and also piling up inventory. If you are having a cash cow, which is generating more of a cash, one line of business, and what you do and make a mistake of taking that cash out and putting into business which is struggling, because that business is close to your heart. It's not generating that much of cash, not able to have the inventory turn which you want to do it, but you are mentally attached with it. Here, the rationality goes out of window. And this is what I have seen people make those kind of a mistake when it comes to cash.
Correct. And I think this happens a lot. There are a lot of companies which have a specific core business and they start diversifying into a non-core business. They start investing there, and the dynamics of that business is very different. And you start seeing these kind of a challenge coming into play.
Worst part is at times, because of those things, we kill the hen which is giving a golden eggs and get trapped into the working capital cycle, and then you never come out.
True. Managing the receivables is something that I have seen becomes a challenge. So, any specific thought process that you have when it comes to managing receivables? What is it that a business can do?
When it comes to receivable, before that I would say whether the invoices has been raised in time or not. Here I would like to give the practical example of real estate. Real estate can raise invoice only at the time when the slab is casted, because that's your plan which you have signed with the individual customers as well. X percentage would be paid upfront while booking the flat. Rest everything would be on the slab casting or finishing. Now, invariably it happens that slab gets casted only at the day end or over the weekend. Now think of, while slab getting casted, you need to give the certification from the engineer or architect on record.
Mhm.
And then you need to bill it to customers. But that has to happen on the same day. Even if a weekend, somebody has to take that ownership, come and bill it, because you are giving thereafter 10 to 15 days for customers to pay. And if that 2 days getting delayed, your cycle is getting delayed. Similar way, when it comes to retail and particularly institutional customers, you can't have the similar kind of a credit terms for all customers. And here I can give you a classic example of five-star hotel, because we used to manage inaugurality five-star hotel as well. Some corporate who has committed 3,000 nights a month and some corporate who have committed only 30 nights a month, you can't give the same kind of a credit to both of them. Your credit mix and the follow-up, as I said, if your system is integrated, the reminder goes to them automatically, and the follow-up. If a person who is heading the accounts receivable is not well, or he has not come to office, or is tied up in some other work, nobody would follow if your system is not automated. Here, the mail would go to the customer just 2 days prior to the due date, and follow-up would start. So this is where it is important to have an integration of system, and it's very, very important to understand the business as well for recovery as well.
What I understood is that the process has to be very clearly identified. So what we do, we also work, for example, with our clients, and some of the processes that we work with revolves around reducing the cash conversion cycle, where they have to identify very specifically what happens at every stage, how much time each stage should take. And I think what you are referring to quite closely aligns with that, because what happens, not necessarily everyone has an ERP, and therefore there could be manual processes also required. So that's my take on this. And I think very good input here, what you said, that even at an invoicing level, I mean, receivables is a separate thing altogether, but even at an invoicing level, you can make mistakes and lose cash flow or generate cash flow late.
And I have also seen, I would like to add over here, I have also seen, I will not name the company, a more than 25-year-old company. The CFO was not having any review mechanism for his own department when it was coming to AR. And I was really, really shocked. When you are having cash crunch and that point in time you are going to run around, it doesn't happen. We need to set the culture for that. And for that, it's very, very important that finance person reviews its own department internal functions as well, whether it will be accounts receivable, accounts payable, indirect tax, direct tax, secretarial, or if he's also heading IT as well. So these all need to be reviewed on a monthly basis, which helps you to iron out or to plan as well.
Right. So the review mechanism has to be strong, because whatever you miss out on a daily basis, at least on a weekly, monthly reviews, you'll be at least able to capture that. and amend your ways. So you also worked with Oberoi Reality, and you were quite instrumental in their IPO. A lot of our clients, the clients we work with, look forward to coming up with an IPO. What would be your advice having yourself led successful IPOs?
For any company who's looking for an IPO, one has to start at least 18 to 24 months because it requires mindset change. It requires discipline, not only in the finance and accounts, but also in all other departments. And typical what happens when a company is not prepared for IPO, still it is a private limited company, the financial books gets closed only at the time when you are filing income tax return, which is 6 months after the year is already over. Till the time it's half cooked books which goes on. So first we need to start cleaning up our own system, and it will start from what are the accounting policies which you have adopted, what are the processes which you have adopted. Start benchmarking those either with the industry in which you are functioning, or I would say go one step further and benchmark with the best listed companies policies, because when it comes to policies or processes, it's not only related to industry per se. As I said, a mindset change which would be required not across finance, but it is for all other department division. It needs to be a
Mhm.
monthly closure. You can't have a monthly closure at after 30 days. It needs to be either on fourth or fifth day you close your books. And when I'm saying close your books, it's a hard close. That happens, then it's very, very important if you are operating into real estate or a retail where your IPR, your leased agreement, or your title documents are being required that are having a very clear title. So all this requirement takes you to the digitization of your documents as well.
Mhm.
Because
Mhm.
anywhere, either prior to IPO, a PE comes, or you go for IPO, there will be a due diligence from the either merchant bankers or the PE investor. At that point in time, it becomes very handy. So you start digitizing those. And one more important aspect, you start taking someone on the board as an independent member, though you are not statutorily required to do, because that
Mhm.
person would give you an insight of a listed company, what is being expected. Somebody is to kind of question you on what is being required, what kind of a question investor is going to ask.
Mhm.
And then you start engaging with merchant bankers. Here also what people make a mistake, people go for a merchant banker who has raised more money, who is the leader in the pack, instead of go to which those merchant bankers who understands your industry, who would be able to understand your company and market you well.
Right.
Those would help you to take you to investors to share what's investor expectation as well, right? And keep your valuation expectation in check, I would say. Benchmark with industry, what's the valuation which is being there, and
Mhm.
that's how you keep that in control. Have
Mhm.
utmost clarity on where you are going to use your funds, for what purpose you are going to. And last but not least, you need to have the audit readiness, because this is going to be our life for next 100 years. Because as we always say, company is a going concern, right? Person
Right.
can come and go, company is going to last unless it is got merged or acquired or taken it over kind of, but it continues. So these are essentials, I would say, one who would like to prepare for IP.
Thanks, Nimesh ji. I think some very valuable insights, and I'm just going to summarize them for our audience. First being, so when they have to come up with an IPO, start at least 18, 20 months early. Second, have a clear understanding of when you're going to close your books. That's really important. Third, digitize your documents. Then comes having an independent member on the board, which can advise you on understanding the IPO bit more. Then the next one is engaging with merchant bankers, keeping your valuations in check, having a very clear understanding of where you're going to use funds. And the last being having an audit readiness. So thank you so much. These are really valuable insights for our audience. I would also like to understand from you, because you have worked in private equity boards. So what kind of metrics and reporting cadence do you think investors expect when it comes to scaling up of companies?
So I have seen both in the retail also and real estate as well. It all will depend on which sector you operate and at what phase of growth prospect you are. When you are just a startup kind of, the P involvement would be very, very high in that sense. They would like to know, starting from whatever the compliances of SHA would be the first and foremost, whatever the shareholders agreement which they have entered into at that point in time.
Hmm.
As far as compliance is concerned, no leeway would be given. So it's very, very essential that some people take ownership of those compliances very seriously, because there is no second thought on missing out on that. Second, when it comes to operational, if it is retail, as you know, it's a weekly game. And every week, whatever the weekend has performed, that's need to be shared, that needs to be benchmarked. If there is a new launch, they would be very eager to know how that market has responded to, what was the projection vis-a-vis what we have achieved. And their biggest concern always would be, what is the working capital cycle? That need to be provided on fortnightly basis. That's what they look at, because based on that, they have committed cash. And somewhere I've also seen the commitment would come with some kind of internal achievement also. If new stores being launched or number of brands being acquired, after that, there will be a further funding would be there. So they monitor those very closely. Those covenants need to be shared. There would be a weekly or bi-weekly pack which they would ask for. Then there would be a monthly pack. Monthly pack would be a full-fledged financials where the profit and loss account, balance sheet, and more importantly, the cash flow. And if there is a subsidy for consolidated cash flow need to be given. And with a one-page summary, it's a liquidity, it's a profitability, it's SHA covenants, is project metrics, and your balance sheet health. So these are absolute sacrosanct for them to get those. One more important aspect which investors would look at it, that at what valuation they have entered. And at any given point in time, whether it will be a 3 months, 6 months, 1 year, they would say, what is the valuation now we have reached? So they will constantly benchmark that part, because ultimately P, when it comes, uh, there is no free lunch in this world, right? There is a commercial transaction. We are not into charity. And so they are putting their own cash, and they also put cash of their own investors. So in a way, they are trustee. So they would like to see what is the exit plans for us, and are we on that track? And at that point in time, as you have taken the money, you will be grilled for that, and you should be ready for that.
Right. Thanks, Nimesh. So, Nimesh, as part of your work experience, work profile, you have also managed investor relations. And I remember reading somewhere where you said you should share the bad news first. So, would you like to give a context behind this, and why do you suggest this?
Yeah, and I can give you that context with respect to Oberoi Realty. Oberoi Realty, we got listed in October 2010, and precisely on 20th October. We are just coming to those anniversary shortly. Now, statutorily, we were not required to publish September quarter results, because we just got listed on 20th October. So statutorily, October, November, December quarter would come for publishing our results. Despite that, we decided that we will publish our results. And now here comes the catch. In September quarter results, we were down compared to QOQ also, quarter on quarter, and year on year also was down. Profitability was absolute down. Now for investors who have just invested, just imagine you are an investor, purchased our, applied in our IPO, you have been allotted on 20th October, and on 30th October, you see the results and saying, oh, it's down by 10%. There is both quarter and quarter and year on year by 8 or 9%. Then how would you feel, right? But we wanted to draw a point that we are not in this race on a quarter on quarter basis. We want to educate investor also that in real estate, there is two important aspects. One is an operating cash flow. And second, when it comes to land bank, how clean land bank and immediately developable land bank which we are carrying. So if you would have put that under the carpet, in the next quarter, they would have come to know, because YOY figures also would have given. But why to hide that? There is nothing to hide. It's a business. It's a cycle, right? It will have ups and downs. But we need to make sure that we are navigating through. But before that, we need to have the trust of investors. And trust of investor doesn't come overnight. You need to be transparent. And I can share another anecdote to that. We raised the money in 2010, but if I'm recollecting correctly, our utilization of The fundraise which we did through IPO was almost after a year. We were not desperate to put the money because we have raised and want to buy whatever comes our way. We want to put it into land bank, which is not disputed, right?
Mhm.
So every quarter thereafter, I think so 3 or 4 quarters, investors kept on asking us this question: okay, why you are not putting this money to use? Why it has been into treasury? But if there are certain things which we are not clear when it comes to legal diligence, we will not
Mhm.
touch that part. So these are the assurance in a way we are giving it. So that the transparency, it's utmost important. And third is, if you pick up Oberoi Reality's investor presentation, the first one, we were the first, I think so, prior to us, or almost 7 or 8 companies were already listed. But
Mhm.
none of the companies were giving the EBITDA margin business wise. We
Okay.
decided that we would like to give this to all the investors. Investors should not ask any question to us on the numbers. They are confused in this number or they don't understand this number. Investors should ask strategic question to us, not on
Mhm.
much of the numbers. And we gave, if I may use the word, we gave everything on a platter. You pick up all the 5 verticals,
Mhm.
be it residential, commercial, mall, 5-star hotel, or even the social infrastructure. Everything was given along with EBITDA numbers on quarter, what sale, each project wise, how much sell, what has been collected. So these are things, and that's the reason if you see now it commands a premium, though it performed very well as far as the delivery is concerned as well. It's a
Mhm.
fantastic brand to have. But this investor has got this kind of a confidence because they know their money is in safe hands.
Right. So truly said, when it comes to running listed company, the transparency is a very crucial element. And I think, like you said, Oberoi Reality has done the same, which speaks for itself. Thanks. Nimesh, because you have led the entire finance functions of companies, I would want to understand how important is team building when it comes to running businesses. What is your opinion around building team? What kind of practices could be there which helps build a good culture, a good team?
To be honest, I always say that any function in the company, but particularly finance, it's a 4 into 100 relay race where someone runs 100-meter first, then pass on the baton to another guy. If I would say procurement has purchased, the material has come, now invoice has already, bill has already been reached finance department. Somebody will book it, somebody will make the arrangement for funds, somebody will comply with the direct tax, somebody else would comply with the indirect tax, right? Somebody would make the balance sheet. So this is a relay race when it comes to, and there
Right.
anybody misses out, the pressure would come to the second guy. So that
Right.
synchronization works in team is very, very essential. And the biggest, this every person have that fear in a corporate that somebody will take my credit, right? And this is where I think so I was able to set that culture from the beginning, that whoever gives the idea or thought, I always used to, even to our board or to, when I was financial controller, I used to go to my CFO and used to say, this is not my idea, this has been suggested by this and this person, right? That builds a trust in the team. And it's like a drama, right? In
Mhm.
drama, your character will get a center stage when your time would come. Not
Mhm.
every artist can come on the stage at the same time, right? But everybody will get a chance to perform. And this is the first and foremost being required. Second, I would say you need to take people who pushes you, because you are not a person who knows everything. And I can give you my own example. I had hired a guy for finalization, and he used to be always on top of any of the updates, whether it will be an accounting standard or whether it be a direct tax or whether it will be a companies act. And he used to come and ask me, sir, can we discuss this? This is the implication of us. I said, hold it, give me a day, let me read it, so I will be able to discuss with you and we will be able to take a call. This
Right.
guy literally used to push me to read and made me updated kind of. I used to be always updated thanks to him. So take a team members who are subject expert, and those helps you grow. Third, I said how you embrace the technology. When it comes to any changeover in the technology or ERP, be with the team throughout that till it gets settled. It may take initially 6 months to implement and then 1 year to settle it down. Back them up at each and every stage. So these are the things which is very, very essential. And one more experiment I would say which I have done, when people want to grow, and when in the large organization,
Mhm.
don't hesitate to change the roles. And we have done that. The head of accounts payable has been moved in a transit from within 3 months to head accounts receivable, and vice versa. Because one of my boss has done with me. In Grasim, my first job, I used to handle for first 4.5 years treasury and banking. And one fine day, my boss said, "You will now be part of investor relation and M&A. One is a front desk job, another is a
Right.
back end support, right?" But that has added tremendous value not only to me also, but from the company's perspective as well. Because now you have a not dependent on one person for one function. Just imagine a person who is working for 7, 8 years in one function, and all of a sudden he gets a better opportunity and he moves out, and the entire department get collapsed, right? But you are creating a win-win situation for both, for the candidate as well and for the organization as well. So you need to keep on investing. And second is constantly send your team for training of that relevant function, whether it will be a accounting, whether it will be a GST, or for direct tax or indirect tax. Right now, if I would like to say, then AI, embrace those and invest in those, because employees per se don't have a time to invest in their own skills, right? Which is very, very important that you identify and take effort to build that.
So thanks, Nimesh ji. Thank you so much for giving these inputs. I would just quickly like to summarize. So when it comes to building a strong team, a good team, the points that you highlighted is first, give credit to people. Second, hire the right people who pushes you. Back up your team when it is required. When it comes to transition, support your team because there could be change of technology. You need to help teams settle down. If required, don't hesitate to change roles of people that are working with you. And last, invest in your employees. I think these are some of the very valuable inputs that you have provided when it comes to building great teams. Thank you so much. Nimesh, so we'll move to the final segment, and that is called as the rapid fire round. So what I'm going to do is I'm going to ask you a few questions, and I want you to answer them in one word or one sentence. So whatever comes to your mind first. So first question to you, are you a fan of Shark Tank?
Yes,
Hard work or smart work?
I'm a hard worker. To be honest, I always say that I'm a not a ek party or dvi party. I'm a three party. When I read or get my concepts clear 3 times, but I'm ready for it. I know every human being having their own strength, and you need to back your strength. And that's where I said mm, I'm a hard worker.
Most important financial ratio.
It's ROI. Ultimately, that defines everything.
Would you prefer AI based tools or traditional tools?
Right now, AI backed tools, because it makes honestly life easy. And you need to embrace technology, and that's what I from the beginning I feel. If you want to grow, you want to move ahead of the curve, you need to know how it's going to help you. And there are so many things which is happening right now in finance and accounts. Entire reconciliation now, I don't think so any of the company of a large size would be doing manual reconciliation, for example, bank reconciliation. These are all bot, all machine learning through. Even majority of them are booking their invoices, which is almost 90% accurate through bots or technology. So it's very, very essential through AI.
Right. What do you think is more important, hiring the right people or retaining the right talent?
It's a tricky question, but hiring right is more important, I would say, because at times it's a misfit in the organization. And the biggest issue when it comes to is their cultural misfit creates a havoc within the team. Hiring is very, very important, because person are going to go, right? I myself have moved over 6 jobs, right? So if a person gets opportunity, you will make an effort to retain, but hiring the right guy ensures that it continues, that tradition continues.
Great. Thanks, Nimesh. Thank you for your valuable insights. These are very good inputs when it comes to scaling up an organization, and I'm sure our audience will find a lot of value in it. Thank you so much.
Thank you.